Hello, friends. Can you guess what company we are going to talk about today? It's a debt-free, cash-rich, dividend-paying company in the industry of mining, and it has very strong fundamentals. So first, let us describe our approach in identifying the great companies. Before we go there, you can please subscribe to our channel. For more such content, you can join our Facebook group at the link given here on your screen. So we screen and eliminate companies whose sales are falling, which are loss-making, whose operating and net profit margins are negative, and companies that do not pay any dividends and which do not generate cash, and those that have excessive debt in their balance sheet. Then for the remaining ones, after the elimination is done, for the remaining companies, we assign ratings on several parameters, such as sales growth, profit growth, dividend yield, return on equity, and other parameters. So this would give us the top class companies that are traded on the Bombay Stock Exchange. So out of these companies, we recommend the top 20 best rated companies every week. So these would have an India stock analysis rating of up to 80, between 80 and 100, the very strong, super strong companies with strong fundamentals. And then we also suggest a target price for 1 year and 3 years. And then we also suggest the maximum price that should be paid for these companies. And our maximum price to pay includes a margin of safety of 40%. And it aims to earn a minimum of 20% compounded return per annum. Now let's find out the company that we are going to talk about today. Well, it is National Mineral Development Corporation, which is NMDC. It is in the industry of mining. The current market price is around 167 as at the time of making this video. And the company website is nmdc.co.in. And it has an overall ISA rating of 82 out of 100. So any company that has a rating of above 80 in our ratings database is considered to be a very strong company on various parameters. Now let's find out what this company is all about. It is headquartered in Telangana. It was incorporated in 1958 as a public sector undertaking. And it was also accorded the status of Navratna by the Department of Public Enterprises in 2008. So it is India's largest iron ore miner with exploration sites in Karnataka and Chhattisgarh. Now recently the mining leases of some locations were renewed till 2038. And it supplies iron ore to Vizag Steel Plant, SR Steel and other steel plants in the country. In fact, the whole requirement of Vizag Steel Plant is met by the iron ore supplied by NMDC. Now, the work on the NMDC iron and steel plant with the capacity to produce 3 million tons of steel per annum is nearly complete. And as per the recent announcement, the plant will be operational from Q3 FY 2021-22, that is the December before the close of this year. And the board has already approved the demerger of the steel plant, and it is most likely will be completed in this year. Now, what do we like about this company? So here are some of the facts about this company which we like. As explained previously, the company was accorded the prestigious Navratna status by the Department of Public Enterprises in 2008. And another important factor is that it has been paying dividends regularly every year, and the dividends have been increasing. Now, at the current price, the dividend yield works out to slightly above 4%. It is almost a debt-free company. When I say it's almost a debt-free, it has a debt of about 500 crore on its balance sheet, which is very negligible for the company of this size. And this debt was taken to set up the steel plant. And towards the end of this year, the steel plant is going to be demerged, and maybe it will be converted into a separate company. And the debt part will also be transferred to the steel plant. So this company is almost a debt-free company and the largest iron ore exploration company in India. It has cash reserves of around 6,000 crore on its balance sheet as at March 31, 2021. And it has also completed a lot of share buybacks in the recent past. And it reported a sales of 15,719 crore for 2020-21 as against 12,000 crore, registering an increase of 28% year on year and similarly 114% for the last quarter. The increase was mostly on account of price increases for both fines and lump ore. And the profit after tax for 2020-21 was at 6,196 crore, which is up 75% as against 2019-20 numbers. The net profit margin is at 40%. As explained previously, the company has set up an NMDC iron and steel plant with the capacity to produce 3 million tons per annum. And as per the recent announcement, the steel plant will be commissioned and demerged in Q3 or Q4 of 2021-22. Also, as per the recent MMDR Amendment Act of 20, the major cost for NMDC is the royalties that it pays to the state governments wherever it operates mines for giving it the right to mine iron ore from those locations. So as per the recent MMDR Amendment Act of 2021, the company will be required to pay 150% of the royalty expenses to the state government. Now, the royalties are 15% of the sale value. So now, as per this act, they have to pay 150% more of these royalty expenses. So that is the proportion of royalty that needs to be paid to the state governments will be 22.5%. And NMDC is passing this on to the customer by raising the prices of iron ore. So royalty is the major cost of operation or the cost of production for NMDC. So this royalty is going to be slightly higher going forward because of this Amendment Act, but this increase is very well covered by NMDC by raising the prices of its fine and lump ores. Now, the Government of India is the major stakeholder in NMDC. It holds about 60% of its share capital. Recently, the Government of India has completed an offer for share by disinvesting its stake to the retail shareholders at around, to retail as well as non-retail shareholders at around 165 per share. So several mutual funds have bought the GOI stake at this price. Now, here are some important financial ratios. The sales growth has been tremendous in this year. It was 31.4%. And then the profit growth has also been tremendous. It's been 76%. The EPS is 21.42. Operating margins are high. The return on equity is around 20%. And the dividend yield, as I mentioned earlier, is 4.63%. And it is a very debt-free company. And it has cash to the extent of around 6,000 crore on its balance sheet as at March 31st, 2021. So the promoter holding, so the major shareholders of NMDC are the Government of India and the LIC, the Life Insurance Corporation of India. Together, they hold about 70% of the share capital of NMDC. Now, coming to our targets and recommendations. Here are our targets for 1 and 3 years. Our recommendations aim to return at least 25% on your investments per annum. This is without considering the dividends that you might receive on these investments. And the maximum price to pay contains a margin of safety of 40%. Okay, it has sufficient cushion if the things do not turn out the way we expect them to. Our 1-year target for NMDC is 240, and the 1-year maximum price to pay is 125. However, this stock can also be purchased now at around 170 levels because there is still a lot of potential for your investments to go up during the course of this year. And also a lot of mutual funds have bought the Government of India share at 165. So that should give us a lot of confidence about buying the share at the current market price. Similarly, the 3-year target for this company, as per our very conservative estimates, is 300, and the maximum price to pay for this target is 130. Hope you liked the presentation on NMDC. Now you can check out our products at http://indiastockanalysis.com shop. You can also subscribe to our YouTube channel and hit like, and join our Facebook group at the link shown on your screen. Thanks for listening.